Hello and welcome to today's video on disclosure and presentation of EPS. So in this video, we'll only be dealing with the disclosure and presentation. We will not be dealing with the actual calculation. If you want to look at the actual calculation and learn how to do that, please go and have a look at lectures 1 to 6, which are on your Blackboard page. So when we're looking at basic and diluted earnings per share, both of these amounts must be disclosed on the statement of profit and loss and other comprehensive income. IAS 33 indicates that they must be disclosed in the same prominence as profit, meaning that the font as well as the bolding and the precision must be the same. Because profit is generally presented in rands, we also need to present earnings per share, both basic and diluted, in rands as well. If there are multiple classes of ordinary shares, in some companies this is possible. We need to disclose earnings per share and diluted earnings per share for each class of ordinary shares. On a side note, what exactly is a class of ordinary shares? As discussed in the share capital lecture, a class of ordinary share is just simply a demarcation or a group of shares that have a similar characteristic. Ordinary shares might be cheaper if they have less voting rights or less power to make decisions, or if they have a right or don't have a right to dividends. Because these different characteristics mean that the share changes in price and nature, companies tend to classify them as a class of ordinary shares. So to reiterate, basic earnings per share as well as diluted earnings per share for each class of ordinary shares needs to be presented on the face of the statement of profit and loss and other comprehensive income in the same prominence that the profit has been displayed in. When we look at the notes to the financial statements, we have what is called an earnings per share note. We're going to look at that a little bit more in detail in this video. But basically, what it is it shows us how the amounts for basic earnings per share and diluted earnings per share were calculated. We break it up into the various components. And remember, both of these figures are ratio. And so they're made up of earnings and WANOs. And so we'll have a reconciliation for both earnings and WANOs in this note. Finally, dividends per share, again, which is not required by IAS 33, but is required by IAS 1, is required to be displayed or presented on the statement of changes in equity. It can also be presented in the notes of the financial statements, specifically if there is a complex calculation that goes along with dividends per share. Remember, dividends per share can be complicated when there is a capitalization issue in the current or prior years. With regard to the actual note, the earnings per share note, we need to have a separate section where we reconcile the numerator or the earnings amount back to profit. That means that our reconciliation should start with profit and work its way down to diluted earnings. Also, with the numerator, we need, again, a reconciliation between how these amounts were calculated, as well as a reconciliation between diluted WANOs and basic WANOs. Okay, so this is important. Sometimes what can happen is there can be a potential ordinary share issue that happens before the financial statements have been authorized or sent to the actual shareholders, but after the reporting date. This kicks into effect IAS 10, which is the standard on events happening after the reporting period. Because it's happened after the reporting date, we cannot necessarily make an adjustment and change our note for this specific issue. Instead, we have to disclose this somewhere on the financial statements so that it's clearly visible to people and that there is no confusion around the actual issue that has happened. The problem is that sometimes these issues can impact the earnings per share quite materially. So we must ensure that we disclose it clearly and also reflect the changes in the number of shares due to anything, for example, like a capitalization issue. When it comes to the actual disclosure and presentation, it's a little bit easy for us as students because the actual work has already been done. The work of calculating earnings and calculating WANOs is simply going to be copied and pasted into the actual note. So it's just the formatting that we need to get right. It's just the actual movement of the numbers that we need to get right. For example, in our calculation of WANOs, we had 3 columns. We had the actual column, the WANOs for the current year, and the WANOs for the prior year. When we're presenting it in the note, we might not have, or we will not have the actual column. We're just going to have the last 2, and we're just going to tweak the way we present it. So for example, in the note, we will not show all of our calculations. Instead, we will cross-reference it back to our calculation with 3 columns. So let's have a look at how that looks in the real world. So firstly, let's start with our profit and loss statement and other comprehensive income. What you'll find is the profit is there, and in the same precision, so this is presented in rands, this is also presented in rands, and it's in rands per share, not cents. So basic earnings and diluted earnings per share is just below profit, and it is in rands per share. There's also a reference to a note. Let's have a look at what that note looks like. So in the note, there are 2 important parts that we must always have. We must always have the reconciliation of profit for the year back to diluted and basic earnings. Okay, and in there, we always start off with the profit amount. When we start off with that profit amount, we're then going to take out our preference dividends. Does this calculation look similar to us? Well, it is exactly the same calculation that we did in our workings to arrive at these figures. When we look at, then we're going to get basic earnings per share. Remember, this is always a minus. We always want to minus the preference dividends because that amount does not belong to the ordinary shareholders. It instead belongs to the preference shareholders. So we want to reduce the profit attributable to the ordinary shareholders by that amount. So it's always a minus. We then arrive at our basic earnings per share. Now, for most cases, we're going to have a savings of either preference dividends or it's going to be debenture interest. Remember, these are only for convertible instruments. So ensure that you've included only convertible instruments in your calculation for diluted earnings per share. Generally, we're going to have a saving, which means we're going to add it. So this is a plus. This is generally always a plus. And what that means is we add the after-tax interest as well as the preference share dividend saved back to the basic earnings per share, because now we are assuming that these instruments have been converted into ordinary shares. And that's going to give us our diluted earnings per share. When we look at the reconciliation of WANOs back to basic and diluted WANOs, we start off with our basic WANOs. Notice when we were doing the reconciliation for profit, we didn't start off with basic earnings. Instead, we started off with profit. Here, we start off with basic WANOs. After we have our basic WANOs, we then will have any conversions that are happening in the current year. Now, remember, up in our earnings part, we had a saving of preference dividends. So the conversion that we find at the bottom reconciliation of WANOs must be in relation to those same preference dividends. Here we are assuming that these preference dividends have been converted into, or preference shares have been converted into ordinary shares. So that is why we're adding it back to the basic WANOs. That gives us an amount that comes at the end, which is our diluted WANOs. So again, just to reiterate, the top reconciliation that we find in the note is exactly the same as our calculation of earnings, which we have done many times by now. So we just need to copy it and make sure that there are no workings, because we want to always refer the examiner back to the actual calculation that we've done on earnings. So there won't be detailed workings specifically in this note. In addition, our reconciliation for WANOS is just going to be the bottom part of our calculation in the three columns. Here are the three columns again that we were talking about earlier. We've got an actual, we've got a weighted current year, weighted prior year, or restated prior year. And that is the calculation that we're actually going to see being, what's the word, reformed or retransformed into this bottom part of the note. Finally, let's look at dividends per share. So the dividend per share is going to be presented on the changes statement for changes in equity at the year end, and generally it's just below the total balance. And that is where our dividends per share is disclosed. In terms of the calculation, generally there isn't much of a calculation. However, it can be included in the notes at the option of the preparer. Thank you for watching this short video on the presentation and disclosure of EPS. Please come back next time.